but it's justifiable. It's high quality. You kind of can build a good thesis around it. Kind of makes sense. And as network activity increases across all of the Web3 ecosystem, we will see activity on Uniswap, Aave, everything just increasing. Just as more things come on chain, there's just more activity. I mean, there's good businesses. You would be short the SEXs, the centralized exchanges, and long the DEXs, i.e. their market share over time rises faster than the market share of, let's say, Coinbase, Robinhood, Kraken, whatever, right? Is that your mental framework, that DEXs become a larger part of the system, or not, because of the onboarding still is lacking?
Hey guys, welcome to Everyday Finance. Bitcoin's price has dropped to its lowest point in 4 weeks, which has shaken investor confidence and raised worries about the momentum of the market. Following the realization of profits on more than 3.4 million Bitcoin by long-term holders, prices fell below $109,000, as reported by ETF inflows have slowed down since the Federal Reserve's most recent rate decrease, which indicates that fresh demand is lower. In light of the fact that Bitcoin has broken crucial support around $112,000 and is currently sitting near $108,700, analysts have warned that it is probable that the $107,500 barrier will be tested. The taking of profits has increased to levels that are often observed near cycle tops. Short-term holders are now selling at a loss, both of which are indications of developing market stress. It is feasible that Bitcoin will continue to be under pressure if there is no renewed demand from institutions. Nevertheless, Michael Saylor and others feel that a comeback in the fourth quarter is possible once macro conditions improve.
Yeah, it used to be called, back in the 90s, we used to have, you either bought the growth stocks, and you actually outperformed always, and those people who wanted to be more traditionalists would do something called GARP, which was growth at a reasonable price.
Yeah.
Which is what they're doing here. I can see it. I mean, even the hedge fund managers we deal with at XPAM, they kind of gravitate towards this because you can build a justifiable thesis around valuation, because most people don't really understand the Metcalfe's law stuff.
Yeah.
But
Makes sense.
To me, it underperforms still. I mean, Uniswap may be amazing, but it's never going to outperform a layer one over the full cycle.
That seems, I mean, I would argue that it depends on the layer one. Like, maybe not the tier ones or tier twos.
No, I mean the tier ones and twos. You know, the ones that get momentum and are growing.
Yeah.
Even if the revenues are growing in Uniswap at the same rate, it won't go up as much because it's priced off revenues and not off network.
Yeah, like I believe that to be true. I've oscillated a little bit. I was of the view that we were going to see a re-rating in DeFi protocols, but I don't think that I don't think that smart contract platforms suffer as a consequence. Put it that way.
Yeah.
Right. And the reason for that is that I see a world where the very high quality applications, DeFi applications, because really DeFi is the pillar or the subsector within crypto that has product market fit. It's clear. Real world assets, tokenization, all those tokenized assets are going to be in lending pools and collateralized in Aave and more. You know, I think the outlook is very, very positive there. And I thought that, you know, like a business, they will end up owning the customer to some degree, and with AI sort of augmented into their applications, that they would become, I guess, the moat would sort of improve around the high quality ones. Like, you can kind of see that there is like a tier 1, tier 2, or tier 3 sort of aspect forming in DeFi protocols. Like with Borrow Lend, it's really Aave and Morpho, I guess. There's a whole list, a long tail, you know, and some of them are high quality, cheap, and growing very, very, very fast, but there is sort of a tier structure happening. So I thought that there was going to be a re-rating, and I still believe that to be the case. And I think there's a case to be made for smart contract platforms to be re-rated down when you start looking outside of the top tiers. Like, I look at some of the multiples and like, I'm going to really piss off a lot of Cardano fans, but like the thing doesn't have activity. It trades on an insane multiple to its settlement value and to every other metric. And I think that those multiples have to compress over time. And I'm surprised it hasn't.
It depends on the number of users still. I mean, not users, but wallets, whatever it is what's driving it. Because there's not network activity.
Yeah, something's driving it. Not sure.
Yeah, and I don't want to piss off everybody by talking about these things, but the revenue thing to me keeps coming up, and it just reminds me of the 90s, growth at a reasonable price, and it always underperformed the actual things they wanted to buy. But it's justifiable, it's high quality, you kind of can build a good thesis around it, kind of makes sense. And as network activity increases across all of the Web3 ecosystem, we will see activity on Uniswap, Aave, everything just increasing. Just as more things come on chain, there's just more activity. I mean, there's good businesses.
Yeah. And I think they to some degree, they end up owning the customer in the end, like the business, and a lot of the chains get sort of like abstracted away. So I think there's a case. I haven't actually added any. DeFi
How do they
protocol.
own the customer? Talk me through that process.
More so from a relative to smart contract platforms. I think in the future, we operating on chain will not necessarily be as attuned to which blockchain we're operating on, because we're going through an application front end, which is not the chain. It could be the wallet, right? The wallet is really not the new front end. It is the front end into the crypto economy. And so, or the specific application that we go to for whatever purpose, whether it's to swap something or, to collateralize a loan or whatever it might be. And so whether we're operating on Ethereum or Solana or an L2 is sort of irrelevant. It's more so the application. And if we like that experience with that front end, we'll do more business with it, and they will collect more of our sort of, our fees and revenue from us. So that's more the case. It's not to say that in the hyper competitive crypto economy with low barriers to entry that, a competitor can't come along and knock Aave off the top of the table, or knock Uniswap off from like DEX, from spot swaps or spot volumes. That can happen. But I just think that relative in these two worlds of applications, like the higher layer versus the bottom layer, I think in the future, we'll think less about the chain and more about the application.
Following a strong surge to $253 in a span of less than a week, Solana has also experienced a decline, sliding below $200 to $192 for the first time. The decline of 19% had a significant impact on sentiment, but a significant catalyst is on the horizon. It is possible that a new wave of institutional demand will be released on October 10th, when a decision is made about the proposed grayscale spot Solana ETF, smaller alternatives, such as the staking exchange-traded fund ETF offered by Rex Osprey, are available. But a direct spot ETF would bring about greater liquidity and wider adoption. Given that institutions possess less than 1% of Solana supply in comparison to 16% for Bitcoin and 7% for Ether, analysts believe that Solana is in a particularly advantageous position to experience what some refer to as its institutional moment.
And talk to me about DEXs. What do you see happening there? Where's the interest lie outside of Hyperliquid?
It's a good question. So,
or is it just spread across different chains? What are you seeing? Anything interesting there in DEXs?
I think there's, you've got Base, Solana, and Ethereum, right? Ethereum main chain, as being the sort of the big venues. Although, Swee's DEX volumes are definitely on the rise as well. And Hyperliquid's DEX volumes relative to perpetuals is like about 5% of perpetuals. It's just like the perpetuals business is insane, but it's also growing its spot volumes as well. I think it's an exciting space because, I've had this discussion with the index provider that I've worked with, which is a company called Bitformance, to create crypto indices for retail, for the masses, right? And originally, we classified the subsectors as like perpetuals and dexes into two different subsectors, and that might be still valid. But I see a world where dexes become more than just spot; they'll become perpetuals. They'll also have inbuilt borrow lend.
Makes sense, right?
Or interfacing like Legos, but like they'll all go after each other's business. So I think it's interesting. I think Uniswap and these businesses have an opportunity to like diversify into other aspects of DeFi. So look, I mean, I like Aerodrome. It's interesting, like, because it seems to be the dominant one on base that has a very strong position and growing fast. Radium and Pump on Solana are very strong as well. And then you've got Hyperliquid coming up, and then on Sui you've got Deepbook.
And do you think theoretically there's a pairs trade to be done, a mental pairs trade to be done, which is you would be short the sexes, the centralized exchanges, and long the dexes, i.e. their market share over time rises faster than the market share of, let's say, Coinbase, Robinhood, Kraken, whatever, right? Is that your mental framework, that dexes become a larger part of the system, or not, because of the onboarding still is lacking?
I'm not sure. I actually haven't thought about that. I see it all grow. I see the whole pie growing.
Obviously, yeah.
Yeah. But I don't really have a strong thesis around that at this point.
Because again, I see a lot of hedge funds with Coinbase or Robinhood in their book, even though they mainly trade tokens, but it's the way of expressing volumes, I guess. It's a really simple macro top-down, hey, this space is growing, there's more volume, those will do well. But I wonder whether I see others having dexes instead. I wonder what's the dominant bet. I'm not sure. My guess is still the centralized exchanges, because you're onboarding new people into the world. And for a DEX, you already have to be in that world, right?
Yeah. And what about the, I guess, hybridization? So you've got Coinbase, who started Base. You've got OKX, which has started a wallet, right? So, and they're going to capture crypto volumes and crypto activity through their wallet. I'm not sure what they've done on the DEX side of things as well. So I think you're going to see forays from the centralized exchanges into the crypto ecosystem to capture the purely on-chain activity in the same way as, well, I mean, look, Robinhood's a classic example, right? So they're building on Arbitrum. So I think that it's harder to make that sex versus DEX sort of dichotomy, I think, in the future, because we're going to see
they're all going to blur.
Yeah.
And the reality is Robinhood and Coinbase and Binance and stuff have so much money that they can basically point and shoot at any sector and have a damn good chance of winning it.
Yeah. Well, did you see that tweet that I sent out? It was a table that I did. I used Bloomberg data to aggregate the global commodity and exchange businesses, the traditional ones. So you've got, ICE and NASDAQ and, London Stock Exchange, Hong Kong Stock Exchange. And then you insert Coinbase or insert centralized exchange volumes and decentralized exchange volumes. And I can't remember the exact rankings, but I'm going to say just at the top of my head that if you aggregate centralized exchanges in crypto and just gave them, like, aggregated them as one sort of entity, they would be 5th or 6th in terms of global exchanges, global traditional exchanges that are trading fixed income, every asset, spot, or cash, and also futures, right? So they're already 5th, and this is an asset class that has, like, what is it, 3 trillion or 4 trillion? And DEXs, if you aggregate them together, were about number 11, so they're just outside the top 10. And if you think about the growth, it's really only been 3 years of growth, 3 or 4 years of growth. Where are they going to be in 3 or 4 years' time? And then you look at the multiple that Coinbase is being assigned, and then you assign that to all the businesses in in crypto. Then there's a lot. It's actually undervalued. Now it's a network, and other people are building on it, like Morpho, and I think it's Morpho, which is a large lender protocol, which is doing really, really well. Our competitor to Aave is building on Hyperliquid now, and so are some of the other sort of high quality applications. So it is creating network effects. So it should be valued on a Metcalfe's law sort of basis, and I think it's very undervalued. But in terms of those other DeFi protocols, like, there is definitely an argument to be made that they are sort of mispriced, the good ones, relative to smart contract platforms. They're trading on sort of multiples around 5 to 20 times fees, which in terms of like compared to like TradFi, it's these are not eye-watering multiples. And I think that's why, when Franklin Templeton set up a team and like all these other traditional fund managers come in, they're going to look at some of these protocols, see how fast they're growing, see the multiples that are levied on them are not the sort of maybe eye-watering multiples that they were led to believe or they thought they would see when they come into crypto. And, they start making allocations to it.
Even while there is optimism, caution is the norm. Solana has just a 41% chance of reaching new all-time highs by the year 2025, according to prediction markets. And Bitcoin's profit-taking patterns indicate of a cooling phase in the cryptocurrency's price. Technically speaking, there are a few reasons to be optimistic. Solana's Relative Strength Index, or SI, has fallen below 30, which is traditionally a harbinger of a short-term bottom. And significant support is located between $185 and $200. Despite the fact that both assets are subject to volatility, the upcoming months may determine whether cryptocurrency will remain stagnant or leap into its subsequent boom cycle. Institutional catalysts and macro developments are on the horizon.